Hi everyone. It was a pretty ridiculous day today. I can't lie. I've never seen anything like this. I just to make sure I re-back tested my Dow data that I have on Telechart going back to the 1920s, 19 like 18, and I back tested it further back to 1880s with data that I have from a few books. I don't see anything like this ever. S&P 500 go back to the 1950s, ever. NASDAQ going back to 1970s, ever. There were three periods in times where we've had very similar like moves. 1998. And let's go ahead and I guess let's just make that video this. Let's just go ahead and show you this. So in 1998, you can see that we had this kind of move before. But I want to show you what happened. So even this move right here was nothing like we've seen. This move right here, this second one, is more like what we're seeing now, except for there's one key difference. The accumulation was quite clear. We made a new low and reversed it on huge volume, giving us two big, huge volume reversals. We don't see that here. Now, the next time that we see this is in all the way to 2009. And the key to remember about this one in 2009 is, first off, it wasn't that V-ish. This is the move I'm talking about right here in March. It wasn't that V-ish, and it came from a very, very long downtrend. We were already downtrending for a long time, made new lows, reversed the lows with accumulation days, then we kind of V-ish moved higher. But still, once again, nothing like we are seeing now. And then the only other time this has ever happened was in 2011, and you can see we kind of had a few V-shaped moves. Look at that one right there. And then as you can see, so I would count this little move as a V shape, but this is really the one that I'm talking about right here, the one in October. This is the closest thing to what we see now, and you see what happened in November. Funny how we kind of look exactly like we did back then right now, isn't it? Kind of, but no, not really. Okay, whatever. But as you can see, we still back and filled going into 2012 when we finally started a rally. So we still didn't V-shape move straight higher and then keep going. So the fact that everyone thinks that we can just keep ripping here is mind-boggling to me. But it can happen. I have to respect that. That's why I have 7 new long signals tonight, and I'm going to take them all. I'm not going to pass on a single one. I'm biting it. I'm falling for it. I capitulate. I'm in. I'm all in. Not really. I'm not all in. But I'm going to capitulate with the signals. I'm not going to nitpick them. I'm just going to fucking take them. And if they fail, they fail. They all risk for me less than 5% per position. So if I'm wrong, it ain't going to hurt even if all 7 fail. The most I'll be risking on the majority of them is 2 to 3%. But before I get there, I want to review really quick. Look at how we sold off, how violently on such huge volume. When we did reverse, we did have one big reversal day, but we weren't even up on then. So if we're tracking the volume post-reversal, it's been absolutely shitty. It absolutely has every look of a dead cat bounce. However, I would have said that before today. After today, I don't know what the hell's going to, which again is par for the course for this year. This year has been the weirdest year ever. You saw a huge volume distribution early 2014, lower volume rally, which then rolled over to a heavier volume distribution phase that led to even a lighter volume rally, which led to heavy volume churning, which led to somehow new highs on even lower volume, which led to this big, huge volume sell-off, which has led to this no volume melt-up again. This is insane. And not only is it insane, I cannot believe how loud, proud, cocky, and confident that these new traders that have they've never seen a market since 2009. These people have no clue what a non-QE market is, yet they're the loudest and most confident. Told you to buy the dip, you buy every dip. Guys, this is insane. This is an absolute insane market. If you did buy the dip and you bought the dip, I can tell you right now, more than likely you're a shitty trader and you got very lucky, and you better hope that this luck continues. But if we look at the New York Stock Exchange, same thing. Look at all the red volume on the sell-offs and the no volume on the rally attempts. It's just, and we're still below the 50-day moving average on this index. Dow Jones Industrial Average, we retook the 50-day moving average, but once again, look at the volume on this V ramp higher. It's pathetic. Absolutely pathetic. The Russell 2000, extremely impressive, even poked its head above the 200-day moving average. super, 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 super awesome. I don't know what else to say about it, but once again, this V move, you can see how the last V ramp went for the Russell 2000. Took us into new highs where we churned, moved lower, tried to get to new highs again and couldn't, and have been nowhere near since. So once again, you want to bite the bullet and go all in here, go for it. You're going to probably pay the price because we've got it back and fill. I'm more than willing to get bullish here. I've got bullish chart patterns everywhere. I've got nice chart patterns everywhere. Tons of stocks I want to watch intraday, for instance. Might as well go through those right now since we got you. UNIS I want to watch. I got ESI that looks like it wants to go again. GIMO, RUBI, earnings winner. HIVE we played intraday today from 6 to 660 on my end. Plug is one that we're going to watch also for a big move here. But there's just some stocks that look like that they're coiling that could make some big intraday moves, so I want to watch them. But I got long signals, so here's what it is. Perfect Speculator can some scans thrown up these. AVGO. It retook its 50-day moving average the last time. If I would have gone long, I wouldn't have been stopped out at all. It went down to 80.12, which would have kept me in with my final call loss 78.96. So it looks like I should have taken that last 50-day moving average break. But here we're getting another confirmation one, so I'll take this one. Volume or no volume, who cares? Market doesn't care. Why the hell should I care? So AVGO is going to be a 2.5% position. Hard sell stops will be immediately placed on the books. SWKS, same thing. Retaking the 50-day moving average on higher volume the day before this time. I'm going to go ahead and enter a position. I don't risk much if I'm long. Perfect Speculator and can slim stock. Hard not to take it there. PBYI, this is a Perfect Speculator stock only, but you know, once again, I'm not going to argue with it. Retook the 50-day moving average. There's one stock, MFRM, that I didn't do that recently with, and I'm paying for it, so I'm going to go ahead and listen to the signal and take PBYI long. Once again, if I'm wrong, I don't risk much. And then an old Perfect Speculator stock, which will probably be one soon enough, Taro, big move on huge volume today. Below the 50-day moving average. Once again, I figure if I go long here, plenty of accumulation off those lows. If I'm wrong, it's not going to cost me much to know that I'm wrong. So Taro, I don't have a problem taking either. Then when it comes to the can slim stocks, OVTI is in for this low price can slim quality like stock or whatever. But OVTI is retaking its 50-day moving average, so I'm going to go ahead and go long OVTI. Once again, I don't risk much if I'm wrong. Hard sell stops on the book prevent any really injury from occurring. And then ATHM is also a can slim quality stock. I'm going to go ahead and go long this stock. Once again, if I'm wrong, risk a little bit more than the other ones, but I still don't even risk 5%. So it doesn't really hurt me if I am wrong. But ATHM is actually producing a pocket pivot point with this signal. High quality stock. We'll see if Auto Home can continue higher. And then my last long position is NYRT. This is from my IPO scan, New York REIT stock. I understand what's happening. I know, I have no doubt about it, how horrible of a country this country is right now, how it only serves the purpose of the top 1%, which means it's real estate and stocks. They already own everything, and they're allowed to own even more. And it's New York. It's a REIT. They've got big sales growth, a lot of mutual fund growth. They're going to start making money on an earnings per share basis next year. Great signal, even though it's not a pocket pivot point signal. It's breaking out above the recent resistance right here. The 1135, 1125, 1130 area by breaking it to 1136. So I can go long here. Once again, if I am wrong, I don't risk much. So 2.5% positions in all of these. Hard sell stops on the books for all of them. But there's been some other disappointing trades. INFU continues to look solid despite its reversal. But BAXS, this was supposed to be a long signal for everyone 2 days ago. I chickened out on producing it. I gave it to the members in the chat room, and then I personally chickened out of taking it because, you know what, a 13-cent stock, just my luck, I'm going to get caught on the wrong side. Gotta obey every fucking signal you get, guys. You want to know why? 2 days later, 76% gain in 2 days. Yes, it would have only been 1% of my account capital, but still, it's always good for the ego. Whenever you can get a big win like this, it helps. Just like RCPT. I tell you what, man, we've been watching this one since back here. Here's where it entered the Perfect Speculator scan, 825. We waited for a buyable pocket pivot point signal. Sorry, stock up 23% in 1 day, isn't it? Or a 50-day moving average bounce. We came so close here, so close. Didn't take that signal. Regret it now. Boom. It is what it is. These would have been huge ego boosters, just like INFU. So this market continues to just make professionals look retarded. I'm not the only one. Trust me. I pay attention to a lot of smart traders who've been around since before the year 2000 on Twitter. We're all in the same camp, just watching all of these newbies lose their minds on how geniuses they are. I don't mind if the market keeps going up, but to be honest with you, I hope it just reverses hard and we at least retest the lows just to simply prove to people that your cockiness is going to cost you a lot of money in the future. Anyway, be careful out there, everybody. FXP, we got a full. I got to get rid of all that hedge. SDAO, SPXS, SQQ, SRTY. I have very, 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 very tiny hedges remaining. Half of them need to come off. I think combined all of those would probably equal to about 1.5, 2% account of capital total. So we're talking about very tiny hedges here. And then EMPH, one of our short positions, not moving lower immediately, 75% sell, gets above the 50-day moving average on a closing basis. That actually doesn't even need to do that. I have a hard buy stop on the books at 14.35. So if it can get up to 14.35, it will be sold out. Not a big deal. All right, everyone. Good luck out there. We're all going to need it.